Welcome back to Investing Talk Podcast.
Today we're looking at energy fuels.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
You know, this company is a fascinating one. It's a real contradiction.
It's probably one of the most paradoxical stories we've looked at in the critical minerals space. I mean, you look at the numbers, they're reporting operating losses, pretty significant ones too, something like negative 98 million over the last 12 months.
Which sounds terrible on the surface.
Right.
But then you look at the market's reaction and it doesn't care. The valuation is sky high. We're seeing some price to sales ratios cited around, 46.7 times?
It's an eye-watering number.
So if the business is losing money, why is Wall Street treating it like some kind of, high-growth tech company?
And that's exactly what we need to unpack. The whole story here isn't about the last quarter's earnings. It's about strategic scarcity. It's about future potential and, frankly, policy. Investors are buying an asset that, you just can't build again.
Okay, so they're not buying the past, they're buying the infrastructure, and it all seems to come down to one specific facility in Utah.
Exactly. The White Mesa Mill. That is the crown jewel, the core strategic asset. And to be really clear, it is the only conventional uranium mill operating in the United States.
The only one.
The only one. Just think about what that means for a competitor. If you want to get into the space, you face this just insurmountable regulatory wall. Building a new mill like that today, with permitting, environmental reviews, it's functionally impossible.
And that control, that sort of monopoly, must shape their entire business strategy. This is where it stops being just a uranium story, right? It becomes this broader platform.
That's the pivot. They're moving to capture 3 completely different high-value streams, and they all run through that one facility.
So what are the 3 streams?
You've got uranium, which is their bread and butter. Then you have rare earth elements, or REs, that's the high-margin future. And finally, heavy mineral sands, or HMS, which is basically their global source for raw materials. It's all about diversification.
We have to talk about that RE breakthrough, because that seems to be the real linchpin for this massive valuation. What did they actually achieve?
So this is where they're really showing execution. They recently announced they successfully produced high-purity dysprosium oxide at pilot scale, right there at White Mesa.
And dysprosium that's one of the heavy rare earths, correct?
It is. It's one of the really valuable ones. It's essential for high-performance magnets, the kind you need for EV motors, wind turbines, advanced defense systems.
And producing a heavy rare earth. That's the hard part, isn't it?
It's exceptionally difficult and expensive to separate them outside of China. Most projects, they just focus on the easier, lighter, rare earths. So by proving they can produce high-purity dysprosium, they're validating their ability to move way up the value chain. It's a huge structural advantage. Competitors just can't do this domestically.
And this is where it gets really interesting, because this isn't just a commercial story. It feels like there's this geopolitical moat being built around them.
Precisely. The whole push for U.S. supply chain sovereignty is the wind in their sails. We're talking about securing domestic sources for nuclear fuel, for critical minerals for the military. I mean, the company isn't just riding a trend. They're becoming a key strategic asset for the country.
So they have a hard asset moat, a regulatory moat, and a political moat.
All rolled into one. It's a combination very few companies have.
Okay, let's switch gears to the financials, because even with the losses, you can start to see the traction from this pivot.
Yeah, you can. The top-line momentum is there. They reported Q3 2025 revenues of $17.7 million. That was a pretty big jump year over year, mostly from strong uranium sales.
But that immediate revenue is one thing. The real story for profitability is all about getting costs down, right? The margin expansion.
That's the whole game. Right now, their weighted average cost for finished uranium inventory is about $53 a pound, which is okay.
Just okay? But they're projecting much, much better.
Oh, much better. Management has been pretty explicit here. They expect those costs to drop significantly.
How significant are we talking?
We're talking down into the $30 to $40 range, maybe even lower in some cases, and they see that happening in early 2026 as they bring on new lower-cost mines. If they hit that, the entire economic model of the business changes.
And that story is clearly one that big money believes in, because they just pulled off one of the biggest capital raises in the sector. The convertible note from October 2025.
A massive one, $700 million.
$700 million. That's a huge injection. It pushes their working capital to nearly $1 billion.
And what's really fascinating isn't just the size, it's the structure of the deal. It tells you everything about institutional confidence. They got that convertible note with an incredibly low coupon rate,
0.75%, right?
0.75%. I mean, think about that. In this interest rate environment, getting $700 million at that rate, it's almost unheard of for a resource company. It's a huge vote of confidence.
It signals that big investors see this not as a risky miner, but as a long-term strategic platform.
Exactly. And they also used a tool called a capped call transaction. This is really just insurance against shareholder dilution. It sets the effective conversion price really high, somewhere around $30.70 per share.
So they get cheap capital now, and shareholders are protected unless the stock absolutely skyrockets past $30 a share.
That's the idea. And that capital is going straight into the Phase 2 REE expansion and the Donald Project.
Let's touch on that. What exactly is the Donald Project?
The Donald Project is their heavy mineral sands development over in Australia. While uranium and rare earths get the headlines, HMS are critical minerals too. You get titanium, zirconium, and the rare earth concentrate monazite.
So this secures their own feedstock.
It gives them a secure, long-term source of raw materials for White Mesa. It's key to scaling up the whole rare earth side of the business.
And if you tie it all together, the capital, the infrastructure, it supports a huge ambition. Management is talking about a path to nearly $1 billion in annual revenue.
Right, and that long-term aggressive goal is exactly why the market is paying such a premium valuation today.
So looking ahead, it seems like the next 3 months are going to be critical. December 25 through February 26.
A very tight calendar of events. This whole period is about validation.
What's the first thing to watch for?
The Q4 2025 earnings release, which should be out in early 2026. The market is going to be watching that like a hawk. They'll want to see if uranium production is beating guidance, and more importantly, they'll want concrete updates on those cost reduction efforts. Are those 30/40 costs looking real?
And then you have the institutional signals coming right after.
Exactly. The 13F filings in January and February. This is where we see if the big funds that bought into that convertible note are now buying more shares on the open market. It's a big tell.
And operationally, what are the milestones we should be looking for?
It's all about executing that diversification. We need to see concrete progress on the Phase 2 RE expansion at White Mesa. News on scaling up dysprosium and terbium production.
Terbium being another one of those heavy rare earths.
Another vital one for magnets. We also need to see progress on the Donald Project in Australia and continued qualification of their NdPr products for major automakers.
NdPr, can you just quickly explain what that is?
Of course. NdPr stands for neodymium praseodymium. They're lighter rare earths. It's still absolutely essential for high-strength magnets in EVs and wind turbines. Getting qualified just means their material is approved by manufacturers for mass production. It unlocks huge contracts.
This brings up the rumor mill. There's always chatter in a space like this. What are the big speculative catalysts people are whispering about?
Well, the first one is a big strategic rare earth partnership. I mean, given their unique position outside of China, they are a natural partner for a major automaker or a global resource giant trying to lock down a non-Chinese magnet supply chain.
And of course, in the uranium world, there's always talk about government contracts.
Always. There's ongoing speculation about a new, large Department of Energy contract for domestic uranium supply. Since they have the only mill, they're really the prime candidate.
And the ultimate speculation is always M&A, a takeover.
Right. There's unconfirmed chatter about interest from larger resource companies. And they wouldn't just be buying the uranium, they'd be buying that unique processing hub, White Mesa, and all the rare earth potential that comes with it. They'd be buying strategic control.
So with all that potential upside, we have to bring it back to reality. Let's talk about the risks. Execution seems to be number one.
It's absolutely critical. They're basically fighting a war on 3 fronts at once: ramping up uranium, expanding the REE circuit for complex materials, and developing a huge project in Australia. A major delay or a cost overrun on any of those could really damage sentiment.
Then we have to come back to that valuation discrepancy, that 46x sales multiple while you're posting losses.
It's the core risk. Investors are banking entirely on the future. That high valuation means a lot of success is already priced in. If they miss targets, if those costs don't come down like they've promised, the stock could fall, and fall fast.
We should also address something that always makes retail investors nervous: insider selling. We saw some directors and executives selling shares recently.
It's something you have to watch, for sure. But you also have to look at the context. The stock had a massive run-up, over 150% in a year. So sophisticated investors often see this kind of selling as just personal diversification, taking some profits after a huge win, not necessarily a red flag on the business itself.
The counterpoint to that would be.
The institutional confidence, that's the real counterpoint. Institutional ownership is still really high, over 48% of the float. And the fact that a $700 million financing was oversubscribed proves that the deepest pockets of capital are fully committed to this long-term story. Ultimately, the story here hinges on execution. This is a strategic U.S. critical minerals platform with unique assets, backed by massive capital and global macro trends. But those high growth expectations are already factored in, making successful delivery on the rare earth and uranium expansion plans critical for the next few quarters.
Absolutely. For investors playing this space, it's a high beta bet on the full structural transition to the energy and critical mineral sector. The key question for you to mull over is this. Can any single company truly execute a simultaneous triple pivot uranium ramp-up, HREE processing, and global feedstock development without running into significant operational friction? And how much margin for error has the current valuation left them? Make sure you don't miss our next analysis by hitting that subscribe button and turning on notifications.